At this point in time, here and now, there's a fair degree of momentum in the housing market. We've got relatively few listings on the market. Asking prices are rising. Rental vacancy rates are very tight. Auction clearance rates, which a lot of properties in Australia are sold by auction, they're still relatively buoyant. But we're just starting to see some signs of a potential slowdown. Listings have been lifting in recent weeks. Surveys in terms of is now a good time to buy a property, they've been deteriorating. And we also are aware that our financial regulator, the Australian Prudential Regulation Authority, they took some action at the beginning of November to lift serviceability tests. And we think they're going to step in the market again to ensure a slowdown for 2022.
Right, Lewis, when that peak, when we do hit that peak under that scenario, is it going to be a disorderly correction in housing prices or well managed?
I think our financial regulator and the Reserve Bank of Australia are keen to see a soft landing in the housing market. Now, that will be a bit tricky, of course. If they put the brakes on too hard, we could end up having a hard landing. I can tell you now, Sydney and Melbourne house prices are extremely overvalued and are susceptible to any type of aggressive rate rise or aggressive intervention in the marketplace. I think they'll take a softly approach to try and ensure a softer landing in the marketplace. But it's a balancing act, no question. If they do get it wrong, then we'll see an extreme one way or the other.
Hey, Louis, Martin here. Let me quickly jump into the question. It seems to me there are some parallels, at least. We like to talk about Wall Street a lot, right? The U.S. stock market. And rather than a boom or bust thing, it's more like, the market's running up against sort of a soft ceiling, which is going to limit gains from here. And instead, we're going to see sort of a redistribution or rotation into different groups of stocks. And as far as the Australian stock market is concerned, it sounds like it could be a similar situation if you see peak growth early next year and then prices coming off in places like Sydney, also Melbourne. But the rotation sounds like it could move to Brisbane, which is where you see prices actually rising.
Yes, that's our forecast, that we'll see Brisbane outperform next year. That the forecast is that housing prices are likely to rise 8 to 14%. Now, the reason why we say that is effectively two factors. Firstly, housing prices in Brisbane are nowhere near as overvalued as what they are in Sydney and Melbourne. Second, we believe that the state border is going to open up very shortly, and we'll see very strong interstate migration flows from Victoria and New South Wales into Queensland and predominantly southeast Queensland. So this is the reason why we think Brisbane's going to outperform. Right now, too, the leading indicators for Brisbane are all very strong. Very strong auction clearance rates, very low levels of listings, buyer sentiment is strong. So Brisbane's ending the year with a lot of momentum.